Now, the Central Bank of Nigeria announced a revision in the cash reserve ratio for merchant banks, reducing it from 32.5% to 10%. The Director of Banking Supervision, Haruna Mustafa, conveyed this information to all merchants through a letter. The CRR represents the portion of a bank's total customer deposits that must be kept with the central bank. This recent reduction reverses the significant increase in the reserve ratio implemented by the Monetary Policy Committee in September, which raised it from 27.5% to 32.5% in a bid to address inflationary pressures. So this morning, joining me from Lagos, Nigeria again, I have another guest, and his name is Ayokunle Olubunmi, Head Financial Institutions Ratings, Agusto and Company. Thank you so much for joining us.
Thank you very much, Lekan.
Now, the CBN changed the CRR, that is the cash reserve ratio, from 27.5% to 32.5%. That was in September 2022 in a bid to tame inflationary pressures. However, it has now reduced that same ratio to about 10%. So what does this mean for merchant banks?
Okay. Thank you very much. I think, first of all, we need to first understand the business model of the merchant banks to have a better perspective of it. Merchant banks, by their nature, right, by the type of license that we have in Nigeria, are meant to focus on the wholesale segment, both for asset creation and also for funding. That's why you notice that the minimum deposit that they can collect is 50 million per tranche. Should they not expect, they don't have access to the retail deposits. So you realize that merchant banks are purely funded by purchase funds, mainly fixed-term deposits, commercial paper, or funds that are actually relatively expensive. Even a large proportion of even their low-cost deposit, their current accounts, are mainly for corporate that are bidding for FX. So really, you notice that the CRR, which is mainly to focus to manage liquidity in the financial system, the banks typically don't focus on the merchant. The CBN typically don't focus on the merchant banks. That's why you notice that up to 2020 January, the cash reserve ratio for the merchant banks was actually 2%. Right. So what we are saying now is a reversal of the mistake that was made in 2020. Before, while the banking industry had about 20-something% cash reserve ratio, the segment actually have just 2%. Like I said, because they rely more on purchase funds, right? And that's the increase from 2% to 20-something% in 2020 has adversely affected the merchant banking segment.
Right now that we see that the merchant banks play a critical role when it comes to financial transactions in Nigeria, and having to look at it more broadly, if this implementation of this policy becomes successful, what do you think the impact will be on the real sector, businesses, and of course the overall economy?
Yes. So the full impact on loan creation, we'll see some impact this year, but the full impact will actually be felt next year. Right. But let's first talk about the merchant bank themselves. Last year, the performance of the merchant banks was adversely affected, like I mentioned earlier. Actually, one of them even made a loss, right? Showing how it's affected not only asset quality, but also performance, right? So what we are going to say now is that a lot of them, they have more resources to actually even trade in securities that a lot of them actually even specialized in, and also to give funds as loans to the customers, right, to the real sector of the economy. But we need to also bear in mind that, look, most companies now are adopting a cautious approach. We've seen a lot of reforms, and a lot of people want to even see what will be the aggregate impact of the economy before they even invest. So most banks also, they are actually adopting a cautious approach to lending. So what we will see is that although the merchant banks have enough resources, they are relatively more liquid, right? Because they don't have a lot of cash to realize with the CBN. We won't really see a commensurate growth in terms of giving loans to the economy. But by next year, while everybody have already digested the impact of all the various reforms, we can see all the impact in the economy, right? We think that will contribute to a significant growth in the loans disbursed by the merchant banks to the real sector.
All right. So while the Monetary Policy Committee increased the reserve ratio in September 2022, it actually kept increasing the rates from last year till about May 2023. Now, with an MPR that is still at 18.5%, will the review of the reserve ratio yield any positive result, as it were? Do you think it will attain full potential for the economy?
Thank you very much for that question. But something that we need to also have at the back of our mind, that if you talk to most banks, the problem is not even the CRR. It's not even a cash reserve ratio at 32.5%. The main challenge that both of them have is the discretionary part. So what you see is that for most banks, after the 32.5%, they still get debited. There are some banks that, as at the end of last year, over 80% of their Naira deposit actually held sterile by the CBN. So the main problem for most banks was actually the discretionary aspect of the CRR, right? And then when the acting governor of the CBN have already written to the bank saying that, look, CRR is now going to be methodological. They are going to stick to the regulatory ratio, right? So for most banks, by the time you talk to them, most of them are already feeling the impact in terms of their liquidity, right? It's already supporting them, right? They have enough funds now to play around to even do their own transactions. So yes, although you might see that it might look a bit higher at that 32.5%, but trust me, I don't think any bank has effective CRR that is less than 50, 60%. Like I said, some even have up to 100%, right? So even with the cash reserve ratio at 32.5%, it's still okay for the banks if you can stick to the 32.5%, right? And if the discretionary part that we've seen over the last 2-3 years is actually jettisoned.
But then when we say that these deposit money banks have their reserve ratio at 32.5% and merchant banks at 10%, why does it seem as though that is showing that there's a discrepancy, as it were? Because one would have expected that you would have a uniform reserve ratio, or is that what it's meant to do? Or is it right for the CBN to actually exclude money banks and have different reserve ratio for merchant banks and the deposit money banks?
Okay, so I think let's take a step backward and even ask ourselves, what's the essence of the cash reserve ratio, right? Mainly it's for liquidity management. You want to manage the amount of liquidity that you have in the financial system. You want to see if it's too high. You don't want to use it to manage it. And like I mentioned to you earlier, the merchant banks, they don't really have access to a lot of liquidity, right? They play in the wholesale market, unlike all the banks that have access to all the retail deposits. The merchant bank actually have access to just the wholesale deposits that are very, very expensive. And the experience of most of them has been, you've collected money at, let's say, 12, 13%, and it's held sterile at the CBN with the CBN. And like I mentioned earlier, because they are impacting even in terms of impacting the liquidity in the financial system is so low. Before, the CRR used to be very marginal. Before 2020, the banking industry, there was a time it was 22.7%, there was a time it was even 27%. But the merchant banks will remain at 2%. Because they don't really have a lot of liquidity that can even say that it's going to be significant enough to affect what is happening in the system. So based on their business model, you notice that the merchant bankers are smaller. In terms of liquidity, they have very small distance. So it was even an aberration that you have a merchant bank with deposit that is even less than 500 billion. You're actually treating them with the same way with a bank like over 5 trillion as even deposits. So it's actually the ideal thing because their business model is quite different. They don't have access to the retail deposits. They are deposits based, most of the time they are tied to transactions, right? So it's actually the ideal thing to have different cash reserve ratio for the merchant banks and for the commercial.
So invariably, you're saying that this new 10% cash reserve ratio will help the merchant banks to optimize their operations. Is that what you mean?
Yes, it's going to help them significantly. Like I mentioned earlier, it will help with risk assets creation. It will even help them with liquidity, right? If not that a lot of them play in terms of, because a lot of them, if you check their history, they were formerly discount houses that were actually trading in securities. A lot of them will have actually breached the liquidity ratio because a lot of them, they've actually been struggling. Imagine as a merchant bank, you're going to collect money at 17, 18%, and the money is held sterile with the CBN, you are earning 0% on it. Even make them because to them actually even making losses. So even before, even when they had 2% cash reserve ratio, you notice that their cost of funding has been significantly high compared to the commercial banks. So definitely it's going to help the merchant banks, help them to even focus more on what they need to be to actually even be doing, to help their operations and even help their profitability.
Then what about the commercial and the deposit money banks? Do you think there should be a review of the CRR too? Because it's at 32.5% and you've talked about what it means for them and a bit of restrictions on their side also. So do you think that at that peg, it is okay for them, or there should be an upward review?
Okay. Let's look at the commercial banks. Like I mentioned to you, some banks had over 80% of their deposit sterile at the CBN. Some had almost 100%. So the announcement in May, right, so in June, by the acting CBN governor that, you know what, we're going to reduce it to 32.5. A lot of them are even fine with it. If you ask most banks, they don't even mind the 32.5%. They don't mind it, right? Just ensure that you stick to it, right? And the thing is that there's no CRR, there's no for investors. You don't want any policy. You just want something you can plan around. Because what we had at the last 2 years was the CRR that you can't even plan towards. You just wake up one morning, you just see some debits. For example, even if you assume that the CRR is going to be 50%, you can actually plan that with the deposit growth and even use that one to plan your business. But what we had before was you don't even know how much you'll be debited for. So you can't even plan accordingly. So while most banks will still say that they don't mind the CRR going further down, right, the commercial banks, but they'll tell you that, look, if you can even still stick to the one that you have, the regulatory ratio, they are fine with it.
All right, thank you so much, Ayokunle Olubunmi. Thank you so much for joining us. That's about the amount of minutes that we can take on the show talking about this, but then we appreciate your presence joining us to talk to us.
Thank you very much, Lekan. Thank you for having me.
All right, you're welcome. Now, as it stands, the new merchant bank's cash reserve requirement takes effect from August 1, as the case may be, and we are hoping that when all the institutions come on board to internalize this new principle that has been rolled out by the Central Bank of Nigeria, it will help either the commercial banks and, of course, the merchant banks to optimize their operations and ratify whatever it is that they have to do with the customers and bring about some growth in terms of their base and what accrues to them at the end of the day. So we draw curtains on the show this morning. Business Edge, thank you so much for joining us. My name is Lekan Onabanjo. Do not forget that you can join us on our various social media platforms at News Central TV. You can visit our websites www.newscentral.africa and download our mobile app on App Store and Play Store. Do enjoy the rest of your day.